Hi YouTube and Tasty Nation. This video is meant to be for Canadian Tasty traders only. Unfortunately, we're stuck with using interactive brokers to trade because there's nothing better available in Canada. Of course, the moment Tastyworks becomes available in Canada, we will switch to that immediately. This is a presentation I gave in June of 2020. Everything is pretty much the same today. There are only a few minor changes since I recorded it. One is that I'm showing my net lick in Canadian dollars in this video, and I've since changed it to show everything on the platform in US dollars. The way you change that is on the IB website and not within the Trader Workstation software. Also, there was a very minor change that I made to my data feeds that I subscribe to, so I'll put a note on the screen for that. Okay, well, enjoy, and hopefully we won't have to put up with this inferior platform for too much longer. So I'm going to try and gear this presentation towards the beginners. The experts might pick up something. The main reason why I want to do this presentation is because I wish I knew these things when I first started using IB. So I wanted to share what I know now in case that helps someone, and hopefully it does. And also, these are just the things that I do. There might be better ways of doing things. I'm going to try and go through everything fairly quickly. With that, I will go ahead and start sharing my screen. The very first thing I'm going to mention is which version of IB I'm using. I use the beta. We can discuss later on, is there pros and cons to the different versions. So I'll just show a screenshot of this. So when you're going to log into IB, I just click this button that says more options, and then I just select beta. And I only do this once, and then I'm always loading the beta version from now on. So it's the newest version of IB. It's possible that it can be buggy, but I just use it and don't really question it that much. And then what data feeds I subscribe to. This is a screenshot of my data feeds in Interactive Brokers if you log in through the web browser. So the US Securities Snapshot and Futures Value Bundle, that fee is waived, $10 a month. It's waived if my monthly commissions reach $30 US, which I always do. So I never really have to worry about that one. So the only real ones I'm paying for net is $4.50 for US equity and options. So you can't really trade options without paying this $4.50. There's really no way, I don't think, to avoid paying that $4.50 a month. But I'm paying a net of $9.50 a month. Oh, and I meant to mention, I've got the small exchange in there too. That's a free subscription, so everyone should add that for free. As far as I know, it's free for the first year, and then if you're a member, it'll be free forever. So that's the one at the bottom here, the small exchange. Can you see that? Okay, and the very first thing I'm going to show in IB is, and you can follow along on the list here if you guys have a screenshot of this, what I look at in the platform, and specifically this portfolio SPX Delta. So I'm going to show a screenshot of how I do that. So you would just go into the global configuration, just type in the search box SPX, and it's the only setting that comes up. So you can't, it's really hard not to find it. You just type SPX, and then I just tick these two boxes here, show SPX Delta on the Mosaic portfolio page, and show Theta and Vega. It's really Theta that I'm concerned about. So I'm going to stop sharing this and move over to IB now. So the very first thing I would look at here, of course, daily P&L, but also my SPX Delta value. So that was what I was showing you in the global configuration. To get to global configuration, you would just go File, click here, Global Configuration, and then do the search for SPX. Or you can click this gear icon over here. It's the same thing. So SPX Delta is really important to me. Just multiply that by 10 to get your SPY Delta. So I have minus 23 SPY Delta right now. And my Theta, of course, should be positive, of course. I find this SPX Delta value is probably correct when you first start up IB. Sometimes it kind of goes away and just goes to zero after a while. It seems to work a lot better on the phone app. So I'll check my phone app if I really want to know for sure. But as we've mentioned in the forums, it does not include futures, any futures contracts or futures options. So you got to be careful with that number and add in that stuff yourself. Okay, so I'm going to now talk about which columns I'm showing. So financial instrument is the first one here on the left. And if you click this a few times, you can reorder the way that your positions are showing. This is the way I like to show my positions, with my naked options up at the top, and then my futures options, and then my combinations here. So if I click this button here, it'll just reorder my positions in different formats. I figured out if you click 9 times, it goes back to the way that I like it. So I'll just do that a few times here. I wasn't counting, but if I do 9 times, it'll go back. Okay, so there we go. So there's my naked options, futures options, single options, and then the combinations of equities and futures down here. These are the columns I've added here. I think these are really important for me, and I use them like every day, whether it's on the phone app or on the PC trader workstation. So underlying price, this is important. If the market was open right now, of course, all these numbers would be filled in. But for example, underlying price, say for ES, right? So I've got an ES put spread here. This is a short put spread. I'm short the, so there's my position column here. I'm short the 2600 put, and the underlying is trading at 30.57. So that's way out of the money. So that's why I like to have this underlying position column here.
Stefan, this is all customizable, right? So when you show the columns up at the top, you know, where you can see daily P&L and that kind of thing, you can customize those columns, right?
Yeah, so I was just going to show, okay, so the next one I like to look at is delta here. So look what happens if you don't have this, it would look like this. So there's no delta there, right? So then you would just go in, hover your cursor over top of one of the columns, insert column, and then delta, you know, is in the Greek section. You'd have to maybe search around in here to find exactly where all the stuff is you want, but there's delta. So now I've just added the delta column.
Awesome.
Why are they pink?
I will get to that. That's on my list of things to show you.
Thank you.
But yeah, so these are ones that I've added. Underlying price, delta, which is the individual delta of the position. So that's not SPX Delta that's shown up here, right? This is a different delta. This is the delta of that underlying, right? So Tesla, I'm short a call here. I'm short, it's almost the 1 delta, right? So the 0.9 delta, so that's 1 delta. So that's like 99% probability of expiring out of the money. It's not showing all the other ones, just I guess because the market's not open. Once futures opens tonight, all these numbers will be filled in. Okay, so the other columns I've added are portfolio theta. Okay, so this is actually my dollars per day in theta. So this would, again, these would be filled in if the market was open. It would show my theta I'm collecting on all the positions. If you added all those up, it should add up to the theta number that's presented up here for your whole portfolio. So I aim for about 100 theta per day, $100 in theta per day. And then the last one that I find is really important is days to last trading day, because I like to know, you know, very quickly which of my options are going to be expiring soon. I happen to have this natural gas option on that's going to expire, but it's worthless right now, so I'm not going to even bother doing anything with it. I'm going to go on to number 3 in the list. So clicking on a trade. Okay, so I've got a natural gas position here. It's an iron condor. And can everyone see my cursor? I'm pointing up to the probability of profit here, 69%. So I find this really, really useful. I'll just go through and start clicking on all my positions and look at what the probability of profit is on the position that I already have on. If you look at my short strikes here, I'm short the 9 delta call, and I'm short the 28 delta put. So combine that together with my wings, it works out to a probability of profit of 69%. So I find that really, really useful. Of course, if my strikes start going in the money, then that probability is going to drop really quickly. The other thing that you can do is, so looking at the position column here, IB is really weird. There's a bunch of things that IB does weirdly that you just sort of have to put up with. At least that's what I do. So it's saying that I'm long 1 natural gas iron condor. And I know that's not true. I know I'm short this iron condor because I'm short the out of the money call, and I'm long a further out of the money call, and I'm short the out of the money put, and I'm long a further out of the money put. So that's a short iron condor, but it's showing it as a +1. So the way if you wanted to see that as a -1 to show that it is a short iron condor, you would just right click and then go flip combo. Okay, so it just flipped that to a -1. Which is, you know, what some people might want. The only catch with that is this probability of profit is not going to show correctly now. So if I click off of this and then onto another, click it again. So now it's showing actually the inverse or the opposite probability. So instead of 69%, it's showing 29%. And that's just something you have to deal with when you do this flipping. So you just have to decide, do you want it to show what your actual positions are or your pseudo position? So here I'm short an iron condor, and here I am still short an iron condor, and you just have to understand that that's the way it shows it.
Can I ask a question from Wayne, please?
Yeah, go ahead.
What page are we looking at now? Is this your portfolio page or your trader dashboard page?
This is the portfolio page. This, I think, is there by default in just the default workspace that I opened up when I started using IB. I didn't really customize it that much. I'll do a little quick introduction to how you would customize it, but I really just went down to, if you wanted to start a new layout, you would just enter a name, create one. You can pick some of the existing ones, which might have all this stuff in the layout that you want, and maybe just tweak it a bit. But I just used the default one. I don't think I really changed this that much. I think I added the options chain, but I'll get to that as well. Yeah, I'm pretty sure portfolio tab is just like a default tab in this main workspace, the Mosaic workspace. IWM, for example. So if I click on IWM, again, I know this is a short iron condor. My probability of profit is 78%. If I expand that out, I can see my short strikes are at the 7 delta and the 15 delta. And if I click on them individually, it's actually showing a chart of those individual options if I click on them. So I don't know how useful the charting is here. Like, I'd rather if I clicked here, it would show me a chart of IWM, but it's actually showing me a chart of the iron condor. So the value of the iron condor changing throughout the day. Now, if I lift the dotted line here, you can see if I have any orders. Oh, I thought I had an order for IWM. So I've got my average price that I sold this iron condor for $2.04. And then I would just go and right click, close the trade, and it'll start routing the order for that closing trade. And then I would put in, say, 50%, so $1.02 to collect, to buy it back for $1.02. And then when you lift this line, that order will show up right here. And actually it'll show up on the chart too. Usually it'll have a line showing at the $1.02 value on the chart, an order to buy it back. Okay, so I'm gonna move right along. Please feel free to interrupt me and stop me to ask questions. So I've got some lists here of different underlyings that I follow, or you can type in here. So this is, so say I wanted to show a chart of SPY. So I'm on to number 4 in my list, doing a chart. So say I type in SPY here. I got to select, you always have to select something after you type in something. So I'm selecting SPY stock. Okay, I'm showing the expected move cone here, which I'll get to in a minute. So the way you would add a chart is you would go and click this unlock button here. So I'm gonna go ahead and do that. So the whole screen is highlighted green now, and you would just go new window, chart, right? So now I've added a new chart. And you can now put that anywhere you want in this workspace and then go and relock it and it'll stay there. This thing over here that shows the probability of profit, that's called quote details, right there, quote details. So if I was to click it, it would pop it up if I didn't have it, but since I already have it, it's already there. And then the other thing down here is the options chain. So I like to see the options chain right on my main screen. So you would just go new window options chain and then move it around wherever you want. And then you go and relock your workspace. The other thing to keep in mind with all these different segments of this workspace is, this is something Jim showed me, is this chain link here icon. So I've got them all green. So this one here is green, this one here is green, this one here is green, and this one here is green. So what that does is if you select one of your underlyings on one of your lists, it should update all those windows all around to that underlying. And then when you're in your portfolio and you select one of your positions, then actually it charts the position, not the underlying. So here gold futures, it's not charting gold futures, it's charting my gold futures bear call spread. And then sometimes it screws up. I don't know if anyone ever else noticed this, but see how the last thing I clicked was ZB. So really I would think it would want to put, you know, the options chain for GC there because I just clicked on GC. But anyway, you can do it manually here. Type in GC, select futures, and the infinity symbol is the continuous contract, which is what I always use for futures. So now it's doing the option chain for GC there. Okay, so I am on number 5 now, the Moneyness. So Luke was asking, what are the colors here of these? So this is just in the money versus out of the money. My puts here, 2600 put, that I'm short is way out of the money because the underlying price is at 30.57. My call, however, has been breached. So my short call at 3,000 is now in the money. So out of the money here is red, in the money is green. And this is one of the things that I can't show live, so I'm just going to show a screenshot. This is the one for the coloring the strikes. So I just typed in the search box here, color with the American spelling, C-O-L-O-R, and then you just take this box down here, color options based on in the money status. In the money is green, out of the money is red. Okay, now placing a trade from the options chain. We're on number 6. So I'm going to type in SPY as our example. SPY, enter, click stock, and it's now loading the options chain for SPY. Now you could do it right from here. What I like to do is actually blow this up a little bit. So just make it full screen so I can see all the strikes and my columns that I've added. So again, I've added some columns here. There's a position column and a delta column. So again, if you didn't have this, you would just go in here, hover your mouse over top, insert column, Greeks, delta, right? So delta shows the delta of the strike, obviously, but position shows it'll be either a +1 or a -1 based on whether or not I have a short or long strike, like I'm holding a contract of the short or long strike. So I like to click here and I like to unclick weeklies, quarterlies, because I don't care about those. And so, for example, I'll do 61 days to expiration, and I'll just start selecting strikes. So say I go to the 20 delta call, or 20 delta put, I mean. So I'm looking at delta over here. So I just click the bid. Oh, and by the way, I always forget sometimes to click this button here, strategy builder. You got to click that. Otherwise, you can't build a strategy. So I'm going to sell the 272 put. So I just click the bid. Go and buy the 262 put. So it's $10 wide. And then I'm going to do the same on the call side. So I'm scrolling down with the mouse wheel. And I'm going to go and select the 332, which is 20 delta, call, and then long the 342 call. Okay, so there's my strategy there. It's an iron condor. It knows it's an iron condor. If the market was open right now, it would give me a proper bid ask, and then I just go and click mid, and it'll actually put the mid price of that spread in this limit box here. But for now, I'll just select, what I think the limit could be. And then I do this on every single trade. You could select GTC or for good till cancel, or just for the day order. I think I have this preset for limit. I'm not sure if you have to do that manually, but it always goes to limit order for me. It's showing my margin impact. And I do this on every single trade. I click this advanced plus button here, and I look at, and then click margin performance. And I look at, first of all, I'll close this for a second. I'll look at, okay, what's the margin impact? So for a $10 wide spread, it's going to be $1,000 US, which works out to 1,300 Canadian. And there's my credit there, $332 credit. And then I like to look at, well, what's the probability of profit going to be on this trade before I place it? So just click this performance profile button, and it's showing 62%. So I find this really, really useful. Like I said, I use this on every trade, even from the phone. It'll even show my max loss. So 684, so that's just $1,000 minus the credit. 316 gives you your max loss. And another thing here, I don't look at this too often, but it could be useful, the theta, portfolio theta. So this will increase my portfolio theta by 3.6. So if I'm aiming for 100, this kind of trade is probably not going to be enough bang for my buck to give me enough theta. So I might want to go to futures to get a bit more theta. But it's also showing portfolio delta, so this will leave me a little bit short by 5 delta. And I assume that is 5 delta in the underlying that I'm trading, so SPY.
Stefan, we have a couple of questions.
Yeah.
So first, do we ever work with the individual legs instead of using the mid price that is given?
Do I ever leg into a trade? Is that the question?
And maybe Wayne can unmute yourself and let us know if that's what you mean.
Yeah, like if you're doing a credit spread, do you ever work the individual leg? So let's say they sell the buy leg, you want to negotiate it separately than the mid price that's given for both legs. Do you ever do one at a time?
I never do that. Never, never, never. I always
Okay.
put on a spread as a spread.
You're
I
going to
will-
find there's more slippage if you try and work the individual
Yeah.
legs.
Actually, that's a good point, Jim. So Tom talks about that a lot. Usually spreads, the brokerages or like the clearing firms or whatever will fill you a little bit better on a spread, especially on illiquid underlyings like Nikola or whatever, any of those ones that are like high flyers, Amazon. You'll actually get a better price on the spread versus the individual legs. And that's because it's less risk for the clearing firm, I think, to take on the other side of your position. So they'll be willing to give up a penny or two to get your order.
The other thing too is that if you try and leg into a position, the problem is that you're going to find is that on your portfolio, even though you think you put on a spread, it's going to come up as individual orders on your portfolio. So, as time goes on, maybe you'll come across these two separate positions, even though they should be a combo, they're not considered a combo. So then trying to figure out how to leg out may be another problem too, right? It's just more for organization too.
Yeah, that's a good point actually. And I'm going to show, so I'm just going to transmit this order. So that order is now sent.
And Stefan, Wayne also wanted to know if you can explain the margin requirements and what exactly they mean and how they calculate it.
Okay, well, the example I just showed there, SPY, I did a $10 wide on Iron Condor, right? So if I did a $10 wide spread on one side, they would margin me for $1,000 because it's $10 wide. And it doesn't matter what credit I'm collecting because they're going to margin me on the full spread because I don't instantly get that money when I sell the credit spread. I don't instantly get that credit. They're holding that back. Trade is closed, right? So that's $1,000, which it's showing here on my IB in Canadian dollars. So it's 1,300 Canadian. Now I sold both sides at the same time. So we've had lots of discussions about this in the forum. IB will margin you on the Iron Condor 1,000. It'll margin me 1,000 US for both sides because I'm putting them on together. If I was to leg in, which I did on some of these trades. So for example, like look at this ES here. I'm short a put spread in ES and I'm short a call spread in ES as well. Why aren't those together as an Iron Condor? It's because I legged in. So I leg in. I don't leg in the individual strikes as you were asking about earlier, Wayne. I'm legging in the put spread and then separately the call spread. And maybe I'll roll them separately too, or try and roll them together, or try and move my strikes around as I'm rolling them. Does that answer your question about margin?
I'm going to ask you one other question, but just if anybody else has a question, I just want to pull up something on my IB.
Okay.
And while he's looking that up, Kevin wants to point out that if the widths of the Iron Condor differ, then the margin for each, then the margins are different for each side. That's a Canadian regulation.
Yep. And I would have been surprised if Kevin didn't mention that. So thank you, Kevin. That's never been an issue for me, to be honest. I just always keep my spreads the same width on both sides. So I have seen the problem that if I leg into an Iron Condor with equities, like for the SPY, that'd be a good experiment to try legging into like an IWM or a SPY Iron Condor and see if does it margin me on both sides. I think it does. And sometimes it depends on the day and I don't really understand it.
I think it does. I've actually had it happen to myself where like say one side was $5 and the other side was $3, but I got margined on 700 as an example.
Right. But I don't think I noticed it doesn't do that for futures. So I don't really worry about that too much because I do a lot of futures trades, as you can see. So for example, my silver put spread here. So my probability of profit is 86%. If I was to, I meant to show an example of doing a futures trade. So why don't we do silver, SI, futures. And I'm going to click the continuous contract, the infinity symbol. Okay, so here's my options chain. My current trade now is, sometimes I have to resize my columns here. Okay, my current trade here is 37 days to expiration. So I'm going to go to the 37 days to expiration tab here. I'll see what other, okay, so these are the strikes I already have. I'm short a 16 put and I'm long a 15.5 put. So I'm going to now sell the call side as a separate trade. So let's sell, and actually, why don't I try to aim for a similar delta? So that was, oh, it's not showing delta because the market's closed. Okay, but let's just, I'll go out of the money here as an example and sell a 19.5 and buy a 20. Okay, so it calls it a bear call. It's already got some credit. Oh, it disappeared. And you can see, so okay, I'm going to select some credit, and you can see already the margin impact is very, very low. So this is the nice thing I like about futures. It's taking into account what I have on the other side of the trade already. So this is span margining in action. So it's not going to double margin me on futures trades. Again, if I go margin performance, so $400 credit, the margin impact is only $125. So these two numbers are a little different because it's futures when you place the trade. So I need $156 right now, but it's only going to hold up $125 overnight and from now on, although that can change at any time when implied volatility changes. If the markets are moving fast, your margin requirements can go up quickly with futures, which is why I define my risk on all futures. So I ran into that the hard way. Anyway, so probability of profit here is 78%. Look at the portfolio theta. I'm getting $4 of theta on this. That's not bad for 125 bucks. So this is the real power of futures right here. So I'm going to transmit that. So that was my futures example. Good.
One more question on the option chain. I noticed the strikes are a different green. Is that the standard deviation?
Yeah, that's exactly what it is.
Yeah. It colors them based on, okay, so it's showing delta here. So if I go to the 16 delta, does it change color at 16? It changed at 20 and 19. There's a color change there. And it's changing at 12.
Yeah, if you go into the option table settings, there is a setting in there that indicates where those color changes. It's under one of the settings.
Okay, cool. I didn't really realize that. I guess I don't pay attention to it, so it doesn't really affect me. I just look at just the delta number.
Stefan, my question is a basic question. So where it says the initial margin and the maintenance margin, what exactly is that? Is that the actual cash that must be available in your account?
Exactly.
Regardless of the other positions that you're holding? That's the actual physical cash that must be present, or can it be also in option value from other positions?
I don't believe so. So the way I understand it is, and on the equity trade, the SPY trade I showed you, the initial margin and the maintenance margin were the same. There's no difference on equity options positions. On the futures options trade I showed in silver, they were different. So that's the difference between futures and equities. So you have to have all the money in your account in cash when you're placing an options trade. You can't use, as far as I understand, but it's not going to take into account your stock that you have in your account, and you can somehow use that margin to trade options. You can't borrow money to trade options. You have to have the cash in your account, right? Now you can borrow money to buy stock, and Luke has talked a lot about how IB has these really good rates on borrowing stock. I think you have to put up like 25% or something of the cash to buy stock. I don't do that. As you can see in my account, I don't have a single share of stock in here. I've got short puts, and that's my stock equivalent, and I've got my more neutral or options probability-based positions here, and I don't buy stock. It doesn't.
Stefan,
it doesn't at all.
Perhaps you could highlight the excess liquidity number. Yeah, right beside your net lick.
Oh, okay. Right. Okay. So yeah, here's my net lick. I like to use maybe around 25% of my net lick. So that's my maintenance margin there. That's how much I'm using right now. I know because I just put this Tesla trade on this week that half of that is just that Tesla call. So I have to like really monitor that one because I know that's a big trade, but I'm at the 1 delta, so I'm not too concerned about it.
So does the maintenance margin fluctuate with the movement of the stock price during the week? Like when we have those big dips or pullback or rally, say by 10%, does your maintenance margin change from the day that you did the actual trade?
Definitely changes, but I think that's because I'm trading a lot of futures. I think if you're trading equities, I don't think it would change, especially defined risk, right? Your margin, if you sell a $10 wide iron condor in SPY, your margin on that is $1,000 regardless of what the implied volatility is doing, regardless of where the price is, regardless if it's in the money or out of the money. Beef and Kai just did a research special talking about buying power on naked options, or maintenance margin is the same as buying power.
Yeah,
I understand. So they can change on naked options. So you just have to
I
see that.
did a naked
Yeah.
Delta Airlines. I wouldn't mind owning the stock. So I was wondering, is my maintenance margin going to go up and down?
Absolutely. So if you want to know more details about that, just watch that segment that Beef and Kai just did. They talk all about that, and it has to do with how close to the money your strikes are. If your strike goes to at the money and then going into the money, it takes more margin.
Stefan, you can right click on one of your positions and click margin impact. And so Wayne, that's how you can see it change every day. You could see it to change. Just type margin impact and it'll come up.
Oh, margin, okay.
There it is, show margin impact.
And
then,
okay.
Yeah, that'll show, yeah.
Thanks, Luke.
For
That's
Wayne,
really the tip.
click on that.
Okay, great. Thanks.
Okay, I was going to show setting alerts next. So I'm on number 7. So, okay, so here's the expected move cone of SPY. So to set an alert, I just literally click alert and I can set it. So say I want to set it at the 1 standard deviation on the date June 23rd. So I want to know if SPY goes outside the expected move on June 23rd. So I just click. I got to click this button here on, especially on futures trades. For some reason, IB doesn't think that regular trading hours are like nighttime for futures. So you always have to click this button. And then you just click activate. So now I've got an alert for 311.4. I'm going to do another one for the lower expected move for SPY and just click again there and activate. And so I will get an alert sent to my watch when these alerts are triggered. So I find that really, really useful. I don't look at charts during the day at all. I'll look at my positions once or twice on my phone. And I notice sometimes people in our chats and whatnot will say, oh, what happened? Did Trump just tweet something or whatever, right? And it's coinciding with when my watch is buzzing and something crazy is happening in the market. Okay, new window, alerts.
Sorry, can I just ask a quick question
Yeah.
about the alert?
Yeah.
Do you have it set so it goes to your phone and you have your iWatch is connected to your phone?
Exactly.
Okay.
Yeah, it's an Android phone and it's an Android watch, and it's been really, really good at buzzing. I do this in both IB and TOS. Okay, so the expected move cones. So you literally just click on this right click on this chart and click chart parameters. And then, so you would just go here, estimated price. It's the first thing that pops up when you right click and hit chart settings. You click this button here that says estimated price range. Standard, it's already preset as a default 1 standard deviation, 68%. And you just click that, hit apply, hit OK, and that's it, it's done. Except the other trick, which Luke was kind enough to teach us one time, which I will show right now. So we've shared a lot of this information back and forth. This is not just me. This is kind of the collective wisdom of a bunch of other Canadian tasty traders that we've been sharing information back and forth. This is the trick, which you'd never figure this out unless someone showed you. You got to click this little tiny arrow here, click and hold, drag this to the left. Oh, there it goes. See, it's moving the blue line as I'm doing that. And then there's your expected move cone. So you could do this. This is for 30-minute candles. You could set this to days, right? So there's the expected move for over different days. And remember, this expected move just comes from the IV. So IV, the 26-day IV is 27% right there on the options chain. And the 61-day IV is 28%. So that's just the expected move. IV is the expected move, implied volatility.
You can use crosshair to see it. If you turn on the crosshair, yeah, that one, crosshair, the plus.
Oh, okay. So there's the date. Oh, good tip, Luke. See it? July 31st. So the tick mark where it says August 2020 is actually August 1st. So that's
okay. So you can just
that
drag
means, for anyone who doesn't know what expected move is or implied volatility, It just means that the options are pricing in an expected move 68% of the time. And remember, we take the one standard deviation, which is 68%. So 68% of the time, the price should stay within this cone.
That's how you see what date your cursor is at, but what's the expected move? Is it the 30-day expected move, the 60-day expected move, the 45-day expected move, the 1 year expected move? Because the cones will differ, right? Is that what Chris was asking?
Yeah, depending on how far you slide the blue line to, because you can slide it anywhere. So you have to sort of estimate, I guess, at the bottom where you're, I'm assuming.
It's like asking which implied volatility do you believe more? Like, I just believe what the platform tells me. I don't say that I prefer one of the IVs over the other IVs. I just, when I was clicking through the options chain there, so each month has a different IV. Each even like a weekly options expiration will have a different IV, right? So you just, I guess you just pick whichever one you want, or just look at the main one that the platform gives you. Like if we had Tastyworks, I would just trust whatever number Tastyworks gives us. So I don't know for sure how to say which one I believe in IV.
Okay, no, that's good. I appreciate that. Thanks.
And I don't know which one it's using for that cone. Like I assume it's the best one. I mean,
Right.
what else can you assume other than it's the best number that you can possibly get?
Thanks for clarifying. Thanks.
And Bruce says that the cone is showing the variance for the date on the crosshair.
Whoa, how did you figure that out, Bruce? Good tip.
Actually, Daria,
Yeah.
my question was in regards to the option chain and the IV that's shown in the right corner.
Oh, okay.
Okay, yep,
So-
go ahead.
You see how the IV changes with every expiration?
Yeah.
How does that compare to the IV index that Tasty uses?
Like so IB does not, Interactive Brokers does not show IV rank at all in any form that is useful. So I don't, even though you can,
Yes.
even though I've got this column on the far right of 52-week IVR, I find that pretty much useless. I don't use it at all because it doesn't match up with Tastyworks and it doesn't match up with TOS. So I just use TOS. TOS is closest to Tastyworks, and in TOS they call it IV percentile. So the IV that's shown on the options chain is the raw IV number, like, so the implied volatility, the expected move for that expiration. And then,
Is that the same as the Tasty IV index?
I would think IV index is the same as IV. Yeah, I would say so. So the next thing I was going to talk about is number 8, which is rolling a trade. So there's 2 ways to roll a trade. These are the 2 main ways that I use. I don't know what other people use, but I can't imagine those other ways are all that good if it doesn't keep your combinations together. So I just use one of these 2 ways. And as you could see earlier when I was showing my portfolio, I've got all my options grouped into groups, right? Like iron condors or put spreads or call spreads. If you had to worry about individual strikes and if they're connected in a certain way to certain positions, like, I think that would just be a nightmare. I would never do it that way. The first way I'm going to show is using my example of GDXJ here. So here's my GDXJ short strangle. I'm short the 51 call, short the 40 put. So again, for some reason, it's not loading GDXJ on the options chain here. So I'm just going to type it in manually. GDXJ. Stock. Okay, so here's the expiration cycles. I'm at 26 days to expiration. So say I want to roll it to the 61-day cycle, which is August 21st. So, and it's July 17th is the current. So I right click there, click roll. Okay, now I've added some columns here again. I've added Delta, of course, which I always like to do. And I've added this days to last trading day. So the exact same way as the other places, you would go insert column and then you would pick those 2 things. This is kind of like the weird part. You have to manually select which expirations you want to use. So because I'm in July 17 right now and I want to go to August 21st, I'm clicking those 2 and unclicking all the rest. It automatically shows the same strikes that I'm currently in right now. So that's the default, which I guess is good. So I don't have to now select which strikes if I want to roll the same strikes. If I do want to now move the strikes, I'd have to manually select which strikes I want here. So I've got that days to expiration there. So I'm closing the 26-day to expiration. So it's already blue, which means it's already pre-put in a buy order for the 51 call and 40 put. And now it's already lit up red. So it's asking me which option do I want to sell? Which option do I want to open a new sell order for? So I'm going to do the same strikes, 40. Okay. And then 51. So sell the 51 call, sell the 40 put. So there's my order right there. If the markets were open again, you could select the mid price of this. You should be able to roll for credit with naked options. And there's your margin impact. So you wouldn't expect that rolling would affect your margin much. If it is, then probably something is wrong. So you could check margin performance again. The performance profile here, the probability of profit, I would ignore. And most of you probably know why, because this is showing the probability of profit for those 4 legs all combined together, which I don't care about. I only care about the probability of profit of the 2 new legs that I'm putting on as a new trade, right? So I'm closing the old strangle and opening a new strangle. I'm taking in $247 of credit. It's costing me a tiny bit more in margin, $334, and then just transmit. And there it's showing the order. So I'm actually going to cancel that because I didn't want to do that, but I just wanted to show you how to do it. So that will keep now my next strangle together. It will keep together as a combo. And that's why I do it that way. The other way to roll is just right from the options chain. Just going from the options chain here. I'm going to expand this out. So there's the strikes I'm currently in. I'm in the 40 put, short put. So I'm going to turn on Strategy Builder. I'm going to scroll down a little bit to show more strikes. I'm going to buy the 40 put. I'm going to buy the 51 call. Okay, so it's putting in those orders. And now I'm going to go to the next expiration cycle that I want. So remember, I already turned off weeklies and quarterlies because I don't care about that. I'm just going to go to now the 61-day. This way is actually faster than that other roll way I just showed you.
And Stefan, this way is the way you would do it on mobile. And on mobile, you have to add the position column.
Exactly. Yeah, that's a very good point. So I've added the position column and the delta column here and also on my mobile. And a lot of my rolling I do from the phone. So on the mobile app, and it always keeps my positions together as a combo. I kind of like that feature of IB. IB has a lot of annoying things, but at least it keeps my combos together. Okay, so that's it for rolling, I think. Oh, okay, I could show rolling half of a position.
I had written in the chat that when you roll out in time, it should reduce your risk, so your margin impact should go down. In IB, I have found that sometimes it does and sometimes it doesn't. So in other words, if you're rolling out in time, a strangle out in time to the same strikes, you're actually reducing your delta because there's more time. So
yeah,
anything could happen, whatever. So sometimes the margin will be impacted positively.
I would have expected that margin requirement on rolling that GDX strangle, I would have expected that to be a negative number because it would be giving me back margin, right? Or at least keeping it 0 margin impact. But it was actually taking margin away from me by $300 there. So I don't know.
I found that too. It sometimes, yeah, especially if you have one strike really in the money or something, that would be a whole other presentation.
Yeah. I don't pay too much attention to margin requirements other than I just check it on every single trade I place. And I try and keep my margin usage around 25%. Last thing I was going to do was, so say for example, my IWM iron condor here. So it's 4 legs, right? So if I wanted to roll 4 legs, I actually could do it by right clicking here, clicking roll, going through the buys and the sells, just like I showed on GDX. And it will allow me to route an 8-leg order, which I've done before, and it works. So that's actually really interesting that IB lets you route an 8-leg order this way. If you did the exact same thing from the options chain, it maxes out at like 6 legs. It won't let you do it from that way. So I just found that interesting. You can roll an iron condor by doing this way. Or if you wanted to roll just the calls. So I've expanded out my iron condor here, right click. I can close the call combo, or I can roll the call combo. So that's the 2 calls, the long and the short call. And then if I click on the puts, right click on the puts, I can do the same thing with the puts. Anyway, I just thought that was an interesting thing, and I do use that one as well for 4 legs. So now I'm going to move on to, I did expected cone number 9. I'm on to number 10 now, pairs trade. Okay, so this is classic TWS. Can you guys see my classic TWS? I remember that I did a really extensive post about this one in the forum, so just check the forum on this. I have screenshots and everything, exactly how to do it, how to chart a pairs trade and how to enter a pairs trade in the classic TWS. So I've got different headings here in my classic TWS, and if I just click an empty line here, start typing something, and then I click combinations, futures, spread, smart, it opens up this new window, and then I click the pair or leg by leg tab, and then type in my first part of the pairs trade. So in this example, I'm going to do ZN, which is the 10-year note, and we'll click futures, and then the continuous contract. And then for the next part of the pair, I'm going to type in ZB, which is the 30-year bond. I'm going to click the continuous contract again. So this is notes versus bonds, 10-year notes versus 30-year bonds. And it already put in a buy and sell, although I can change those if I wanted to. And then I can change my ratio here. So the usual ratio for notes to bonds is 2 notes to 1 bond. And then I just click OK. And it puts in a new line here. And it's already quoting me the price, although the markets are closed right now. This would be updated in real time. And then I can just hover my mouse over here and click buy. So this would buy the knob spread. Or I can click sell, and that would sell the knob spread. And I can adjust my price and put in a limit order and just transmit. And then the other thing I can do is I can right click and go to check margin impact. And this is one of the really cool things about pairs trading is the margin impact is quite low. It's not margining me on 1 bond and 2 notes individually. It's taking these in a combination together and giving me margin relief. So that's the nice thing about pairs trading. The other thing that's really cool that I found out that you can do is I can now right click on this pair and I can go new chart. So I can actually chart the pair and see how that does over time. And maybe try and time an entry. You know, it's really hard to time entries on these things. At the end of the day, it's a 50-50 shot on a pairs trade, but you get a reduction in risk. So that's the nice thing about pairs trades as well, is you can reduce your risk by about 70 to 80% just by pairing one futures contract against another. So it's very similar to actually Tastyworks' new pairs trader. So IB has had this for a long time. It's not perfect or anything like that, but I think that's an awesome thing that Tastyworks now has the same thing. Tom and Tony have mentioned that quite a bit on the air. Tony especially, when they're looking at a pair, they're looking at if the pair was trading at $1,000 yesterday and it's trading at $1,100 today, you care about the difference between 1,000 and 1,100. So now you've made $100 on that or lost $100 on that pair. Next one, number 11, trailing stops. I've got a little tab here called micros. So for example, M2K is the micro Russell. So if I was wanting to put in an order with a trailing stop, so to do like a scalp or whatever, I would just go sell, put in what price I want. There is a way to trade right on the chart. I'm not going to do that or show that because I don't really do that and I'm not sure how well it works. Okay, so say I'm selling at 1440. I've got a limit order in here. Good till cancel. And then this is the trick here. I've preset these settings for Russell, micro Russell to have these in, but if you didn't have this, you would just click stop loss, trail. I want to do a trailing stop of 20 points. So that's 20 points there. And the reason why I want to use 20 points is because I know micro Russell is $5 a point. So 5 times 20 is $100. So I don't want to lose more than $100 on this, which is why I'm putting in a trailing stop of 20 points. And then this is the most important part. You have to click this button that says trigger outside regular trading hours. Like I said, IB doesn't really recognize futures hours for some reason as being regular trading hours. So you have to tick that. Otherwise, your stop order will not fill at nighttime. And I found that out the hard way. Okay, so I'll go and submit that order. And it puts it right on the chart here, right? So it's going to sell when it hits the red line. And then the second order, the trailing stop is the green line. It won't send that order until my first order fills. So this is like an order sends order kind of thing. And if I lift the dotted line there, it's showing these orders. This is like a parent and child relationship here. So order number 11 is a sell, and it's not going to send order number 11.2 until the order number 11 fills. So that's a buy trail. And if you go and look in your orders, once the first one fills, the second one, you'll see the price update in real time at your trailing stop. So as the Russell 2000 index is moving around, it'll actually update your trailing stop in real time.
Hey, Stefan.
So, yeah.
Sorry, a quick question. So you put in an order to sell this.
Yeah.
I'm surprised that your trailing is below the sell order and not above the sell order.
Yeah, I always found that weird. That's a really good question. And I think the way I'm picturing it is it's using the current price right now to set
Oh,
that.
okay.
Stop,
Got it.
right?
Okay,
So
make sense.
So the current price is down here at 1402, and then the trailing stop is 20.
Okay, perfect. Okay. It was just curious because when you put in the order and it's like, okay, you sold it, but shouldn't that be above it? Okay, perfect.
Yeah, when
Thanks.
that fills, this green line will pop up above the red line.
It'll be above it. Yep, perfect. Thank you.
So now I'm on to number 12. Okay, so SPX. So I'm going to click on SPX index. And I've got my options chain here. So say I want to do a 0 DTE trade for SPX. So I would go to my put side, look for like $1-ish. So maybe 2,900. Oh, remember I have to turn on Strategy Builder. Sell $1. So the 2,900, buy the 2080. So that's a $50 wide put spread. And then on the call side, sell the $1, 3170 and 3220. So that's 50 wide, right? So then I would put in my mid price. I'm going to try and get around $2. Margin impact is 6,800 Canadian, so that's 5,000 US. Probability of profit, 95%. This is why I like doing these trades. And so $2 credit. I'll go ahead and transmit that. And I know if it's showing up as something other than 6,800, then I know I mixed up the width of the spreads. So 5,000 US is 68 Canadian. So I sent that, right? So now when that fills on this options chain, it will show me my position, right? So I'm short I already forget what strike it was. So say 2,900. Okay. So now it'll have a -1 there when that fills, right? So now I'll go in and I'll go and buy that, right, as a closing order. And then it's still a limit, but it's going to be a stop. Sorry. Change this to a stop. Okay. And now I'm going to set my stop value at $4. Then I would just send the order and then do the same thing on the call side. So I would go down here, find that strike, hit the ask, set the stop for 4, and then that's it. Okay. So that's a stop on an option. And then the very last thing I wanted to show was this thing called the Trading Assistant. I don't know if anyone's ever used this, but unfortunately you can only get this on the phone app. For some reason, I don't know of any way of doing this on Trader Workstation. What I do is I have this set to alert me on my watch when the ES futures goes up or down 2%, and then NASDAQ up or down 2%, Russell up or down 3%. This is just my own presets that I put in. I want to know when this happens. Gold up or down 2%, silver, oil, and bonds, and I've got a bunch of other things in my list. And so I found this out the hard way. I was using this trading assistant to send these alerts to myself, and then I opened up an RRSP account, and this thing stopped working when I opened up the RRSP account. And then I happened to shut down my RRSP account a few years later, and then this started working again. So I found out the hard way that this only works if you do not have an RRSP account. I don't ask me well, but that's what they told me, actually. Word for word, that's what they said. And that's it. Thank you, everyone, for your attention, and we'll keep praying for Tastyworks to come to Canada.